Hello, I'm Tony from Buildium, and today I have here with me Brandon Hall, the Real Estate CPA, and we're going to be talking about real estate property management best practices in accounting for property managers specifically. So thanks for joining us, Brandon. How you doing today?
Good, good. Thank you very much for having me.
So I wanted to jump in first with an initial question. What are some basic accounting concepts that property managers tend to need help with in your experience?
Yeah, so in our experience, property managers are generally not accountants. They're very good at managing properties, not so great at accounting for those properties. So one of the things that we often see confused is where do we report CapEx? So those are capital expenditures. And it takes a little bit of tax knowledge as well to book these expenditures correctly, because if I spend $2,600 on a roof repair, that would be booked as a balance sheet item, not a current expense. But if I spend $2,400 on that same roof repair, that could be booked as an expense, not as a balance sheet item. And to understand that, you also have to have the tax knowledge to make that correct entry. So we generally see a lot of confusion around that. We've seen total roof repairs, cleanup efforts, demo everything on the P&L. So we'll see like I don't know, like a roof repair, new HVAC, all that stuff on the P&L as an expense, reducing the total net income going out, which is of course not the correct way to report those items in most cases. We've also seen on the flip side where all of those items, all the repairs, maintenance, everything is on the balance sheet. It's not expensed. That's generally where we see the most confusion is just how do I book repairs? How do I book my maintenance costs? And if the bigger the repair, generally it's going to go on the balance sheet. The smaller the repair, generally it's going to go on the profit and loss statement.
And just based on those mistakes and oversights, what kind of repercussions have you seen from that?
Well, for us, we just correct them. So we're generally the accounting team that's hired by the client or sometimes by a lender, and we'll go in and we will correct the reporting issues that the property manager will come to us with, and then we'll just tell the property managers how to correct them on their own books. So no repercussions yet.
That's good. That's a good thing, right? All right, so the next question I wanted to ask you was, what are some accounting best practices that property managers should always follow when often they don't? I know that we had talked about before, you and I, bank accounting structure being one of them. Not sure if that's something that you see a lot of.
Yeah. So from the idea with accounting is that you want to automate it as much as possible, and you want to make it as easy as possible on yourself. So if you're not going to outsource your accounting, then you definitely want to use some form of software like a Buildium that allows you to automate as much of the accounting function as possible. In order to help facilitate that automation, you're also going to need a few bank accounts directly for certain things. So, for example, you would have a trust bank account to escrow the security deposits, and you would leave that completely separate. So those security deposits should not be commingled with any other bank account that you're operating out of. But one thing that we like to see with property managers is to have another bank account be the operating bank account for your clients. And then have another bank account. So now we're at 3 total. We've got the escrow, the regular account for your clients, and then a third operating account for your own business. And what we like to see is you draw your management fees from the client operating account, and then you do all of the actual expenses related to your own business in that third account, and you put those operating fees that you're charging in that account as well. And what this is going to allow you to do is you can use something like Buildium to manage the account with all of your clients in it. So that's your client operating account. So you can pay bills, you can get contractors, you can cover all of that, collect rents, everything. But then you can also use like a QuickBooks Online or something like that to manage your own operating account. So you can get business level reporting and business level insights. You can figure out how to manage your own cash flows. When you commingle all in one account, you're going to run into accounting issues and reporting problems. You're not going to have, you're not going to be able to automate it as effectively as you could if you were to just segregate those two out. So we really try to work with property managers in terms of, okay, you bought gas for your car. That's not going to be a tenant or a client operating expense. That's going to be your own operating expense. It's the cost that you incur to run your business That's your own operating expense. It's not allocated to any one property. So that
Right.
we just try to break those expenses out, and then it gives you a truer report on what exactly is going on in that property management business. A lot of things that we find with small business owners, especially property managers, is that there's just so much money coming in and out that they just don't understand how to read the financial reports, and often
Right. And they don't follow it.
yeah, but even then it's just like it's just so commingled that they don't even know what's theirs and what's the client's.
Probably makes your job easier as well if it's properly separated and neatly separated, I would imagine.
Absolutely, yeah.
Yeah. Great. Okay, so third question here. In your second blog post that you wrote, and for those of us who follow Buildium's blog, Brandon actually did a series for us this month and covered a couple of different topics. But in the second blog post that you wrote, you talked about scaling your business. What are some common stumbling blocks that you find your clients encounter as they grow quickly?
There's a lot of stumbling blocks. One that we've seen is, again, just not understanding where your cash is going. You'd be amazed at how many business owners don't run a simple budget every month. They think that the accounting is totally fine. But the problem is that, well, you have to have clean accounting. The problem with accounting is that it's all historical. So it's already happened. There's no leading indicators with the past data in most cases. So what we try to do is we try to get people on some sort of budgeting platform. You can use something super simple called YNAB. You can use that's youneedabudget.com, YNAB for short. You can use, I'm actually not sure if Buildium has it, but you can project out cash flows. You can make budgets and do projections for the business level. You can do that in QuickBooks Online. So there's a lot of tools out there that allow you to actually project out. But that's what we want our clients to see is, okay, it's great that I've got 20% profits this past month and for the past 8 months, but what's going to happen over the next 6 months? And then you can run stress tests. You can do all sorts of fun things. What happens if the market crashes? If I lose 10 clients, yada, yada. So that is definitely one area that we see people struggle with scale, because you'll go from like, I'm grossing $100,000 and I know exactly what's going on, to all of a sudden I'm grossing 500, now to $1 million, now to 2 million. And when you get to those size of businesses, you can't just go off the cuff anymore. You really have to have the reporting down pat, and you have to be looking at the correct data. And oftentimes looking at last month's profit is no longer the correct data to be analyzing.
Sure. Yeah, I imagine it, because little problems then when you're operating at scale can just snowball into these massive issues that then impact your margins and most importantly of all, the relationships that you have with your customers and longstanding customers.
Yeah, absolutely. One thing that we like to try to get our clients to do is track their time. And when I first started our
that's a challenge, right? It's not always easy, is it?
Oh no, and everybody always rolls their eyes too. They're like, I don't want to track my time. When I first started the accounting firm, I was coming from a Big Four environment. And they always make you track your time. And every single day, we'd always bill 8.2 or 8.25 hours every single day, just because that's what you did. Ethically, who knows? But that's what you did. So when I left the accounting world, or when I left the Big Four world, I was like, I'm not gonna do time tracking. I don't want to subject my employees to it and all of that. But we went through these same kind of scaling issues. We hit these ceilings where we couldn't figure out, how do you continue onboarding clients to get above this ceiling while at the same time not scale your expenses as fast? And a lot of that comes down to, are you looking at the correct data? So, I mentioned that looking at last month's profits at some point will become a moot point. It's not going to be beneficial for you to do that. You're going to need leading indicators. And that's something that we experienced personally at our CPA firm. We needed leading indicators, especially related to capacity. So what one of my employees suggested is that we all start tracking our time. Now, I'd been not tracking my time for 2 years, and so I immediately scoffed at the idea. But after thinking about it, we did start tracking our time. We used a tool called Toggle at first until we built our own tool. But that was phenomenal. And what we tell our employees is, we're not managing performance here. This is not going to show up in your performance review. I don't care if you work 2 hours a week. I don't care if you work 10. All I care is that you book your actual time worked, because that's what we need to help manage capacity. And as a result, all of our employees bought into the idea. They're all recording their time really accurately. There's no evenly rounded 8 hours a day booked. There's
Sure.
also there's also not the classic 8.5 that you get in the big four world. It's very honest and it's per project. And as a result, we're able to look at it and see, okay, so we're spending a lot of time researching tax topics. Let's build out a knowledge base internally that nixes a lot of this, or let's try to facilitate better communication. So we took those learnings back to our clients. We said, hey, you guys all need to start tracking your time. And when people start tracking their time, it's amazing because one, they feel more motivated to work efficiently because they know that they're on the clock. But two, all the employees, like you might find that your employee, I don't know, took 3 hours to do an inspection at a property. Well, why did he take 3 hours? Was there anything that we could have done to speed it up? Is that an anomaly, or does he take 3 hours on every single property? So it's really cool insights that you can build if you start tracking your time.
Right, and then you can identify those issues, and then maybe if it's a matter of training or information sharing, you can make that happen, and then overall, just it's better for everybody. It's better for your profitability. So that's great.
Yeah, absolutely.
Okay, so question number 4. The end of the year is coming up soon, whether or not we want to believe it or not, which is it's kind of crazy. What are the 2018 tax law changes that will most affect property managers?
Yeah, so the big one for property managers is going to be that new 20% pass-through deduction. And if you are, it's interesting because it only affects you at a personal level. So it's not really at a business level. But at a personal level, if your taxable income is above 157.5K if you are single, or 315K if you're married, then you're going to be phased out of this 20% pass-through deduction. So we're working with a lot of our clients on getting below those two thresholds, whether they're single or they're married. A couple things that you can do as a property management company is you can buy assets this year that you can 100% expense that you'll be using in the future, such as a car or a truck, SUV, something like that, some sort of business equipment. Other things that you can do is simply contribute to a 401k. Let's say that you're a solo owner. You can open up a solo 401k. You can contribute $18,000 as an employee plus 25% of the profits that you make from your actual company as well. So if you're if you're married and you net 325k, there is a phase out that I'm not going to go into. So let's just assume that we have to get below 315k because we're married. Netting 330, 350k, you can contribute to a solo 401k to drive your income down below that 315k threshold. So we're just moving money around. We still own the money. It's just in a 401k account now, ideally a solo 401k, so that we can self-direct the funds with investing and lending and all that fun stuff. But we want to get below that 315k threshold so that we can take the full 20% deduction on our business net income. So that's probably the biggest key for the new 2018 tax law. What do you do since it's the end of the year or it's approaching the end of the year? Well, you got to make sure that your books are super, super clean. Right. And clean being, could I pull them up today if you called me? Could I log into your software and run a profit and loss statement through today? Right. Those would be clean books. And if I can do that, we can talk about all sorts of tax strategy. If I can't do that, we have to clean the books up first before we can even begin to talk tax strategy.
Right. Because if you don't know what you're looking at, then you have no way to properly analyze it.
Exactly.
But it's interesting, though. It sounds like a great year for business owners in general to make some additional equipment investments. And hey, it never hurts to save a little bit, right? Especially this year.
Absolutely.
All right. Now, moving on to the next question, we've talked about it a little bit, but I'm curious what data property managers should be tracking to best understand their success in 2018.
So operational data that could be indicators of success are how many new employees did you add? How many new accounts did you add? Maybe you have one client that started you off with 10 properties. Now they're up to 50 properties. So what's your year-over-year growth look like in that capacity? From a financial perspective, what does my revenue year-over-year growth look like? How about profitability? A lot of times we see our clients grow revenue significantly, but profitability actually shrinks. So one year they gross 500K and net 200K, and the next year they gross 1 million and net 210K. Well, how does that happen? What's going on there where we can't realize that 40% profitability anymore.
What do you see happens in those cases sometimes? I'm sure it varies depending on the client.
Yeah, so oftentimes what we see is just mismanagement of capacity. They're taking on a lot of new clients, but not really understanding how to control costs and managing those clients. So they might engage with more expensive contractors. They might not realize that it's time to bring things in-house, such as my repair shop, my inspection shop, like all that stuff. Not bringing those in-house and saving on cost, driving those costs down could be an issue as well. So yeah, it's generally just from what we've seen, it's generally just we don't know how to scale our costs. We don't know how to solve our capacity issues while we scale revenue. So we focus on scaling revenue, and then we look back later and say, oh, oops, we should have also focused on profitability.
Yeah, so the structure for your operations and just being super efficient, being organized, having the right bank accounts like we talked about before, set up so that the machine is well oiled before you grow. It sounds like it's one of the critical pieces.
Exactly. I think I might have mentioned this in the blog post that I wrote for you guys. One of those, every time that you encounter these ceilings, you have to be very careful in how you break through them. So you might think that you're breaking through a ceiling simply because you're just adding more accounts, you're adding more revenue. But if your operations aren't getting better, then you're just setting yourself up for failure. Ask me because I know.
Right.
We did this personally. I set my firm up for failure. Luckily, it wasn't that bad. But what we did was I just focused purely on revenue growth. I wanted to say I was running a multi-million-dollar CPA firm. As a result, I did not focus on improving our technology solutions, realizing that, hey, if I increase my revenues by 50%, my technology solutions in place will no longer cut it. We need something better. We need a knowledge base. How am I going to train my employees? I didn't think about all of that. All I focused on was revenue. So that's anyway, yeah, full circle. That's something that we see
Sure.
often.
Well, because that's part of the hustle, and like especially when you're an early stage business, it's all about getting those accounts, and you're really doing everything as a business owner. You're doing the marketing, the sales, the operations.
Yeah.
But I think it's natural to run after the money that way.
Yeah.
And to run after growth that way.
One more thought on the question.
Sure.
How do you measure success? How do you measure growth? Something that I've started to do personally is look at how much I've offloaded year to year. So if I'm still, as a business owner, doing all the things, then I have not done a great job at scaling my own life, right? So we can talk about scaling revenue, we can talk about scaling technology, we can talk about scaling profitability, but what about in your life too? Like, are you still, kind of like what you said, are you still doing the marketing? Are you still personally checking on the rental properties? Are you still talking to clients? What are you still doing that you need to be offloading?
Right. What could you be delegating?
What could you be delegating? Exactly.
Hey, that's why other businesses exist, to help each other out. They're experts in all different areas, and I think that's a great way of looking at it, because at the end of the day, if you're still taking on certain activities and you have the budget to hire a professional, you could be spending your time in another place in the case of a property manager, you're really making your residents' experiences and your owner's experience as good as it can be, versus trying to handle every piece of marketing, trying to do all the accounting, for example, because then really at the end of the day, you're taking away from those mission critical activities of your business.
It is funny. When we talk to clients about this, some clients who have scaled a business quickly and they're not like ready for the big accounting firm. Well, they don't think that they're ready, but they definitely are. And, they hear the prices and all that. And they're like, whoa, that's some shell shock. Yeah.
Uh-huh.
And then when I tell them, hey, I don't even do my own accounting. I outsource my own firm's accounting because I think it's such a low value task for the actual business owner to run. Get it off your plate. How are you going to be paid $400 an hour doing your own accounting? You're not going to get paid that much money. But where can you focus your time to get paid that much? That's what you need to be focused on. Yeah,
that's a great point. It segues perfectly into the last question I had for you, is how do you select a competent accountant? Like what should property managers look for in an accountant?
Yeah, that's a good question. And really because, well, so there's a couple of licensure that you can look at. You can look at EAs, enrolled agents. Those are generally tax people. Sometimes they do have accounting experience. You can also look at CPAs. Those are certified public accountants. They generally have a wealth of tax and accounting knowledge.
Sure.
I'm a CPA. Most of my employees are CPAs. We have one EA. But she does not provide the accounting, so she's only on the tax side. So the first thing that I would look for is potentially licensure, but the caveat there is that anybody can become a CPA as long as they have the correct credentials, right? As long as they go through the schooling and pass the test, which is grueling, you can become a CPA, and then you can hold yourself out as a CPA. So you still have to be really careful. What I would look for, and this is what I do personally whenever I'm looking to hire anybody, and definitely a professional like a legal counsel or insurance or anything like that. What I'm going to do is I'm going to ask for referrals. Two, I'm going to try to find people that they don't refer to me that use that person, right? Mm-hmm. So is there somebody at my local meetup that might potentially use this professional provider that I can ask questions about? Because if you ask me to refer you people, I'm going to refer you my 3 favorite people, right? And they're going to say amazing things about me. So you need to do some of your own due diligence too. Another thing that I do is I try to find how well their brand is recognized. So if they participate in public forums, if they have received any awards, that's the stuff that I try to look for there. Or are they just more of a traditional shop and they just hope that people come in through some advertising and stuff like that? It just kind of helps you understand who this person is and how they're running their business. But at the very least, I mean, a good accountant in today's world should be getting you on QuickBooks Online or on Xero. Should be recommending that you use something like Buildium to manage all the properties, to manage the leases, to manage the bill pay, and helping you get structured so that you can get reports out quickly to your clients. There's nothing worse than slow reporting from a client experience standpoint. And the reason that I say that is if I'm an accountant and I've been hired by a client and the property manager is delaying my reports, I'm going to let the client know that it's the property manager's fault. I don't want it to be my fault, right?
No, absolutely not.
So we try to help property managers get up to speed along those lines so that they can just look more professional.
Right, and there are so many tools these days to obviously get out and put feelers in your network to see about what other people have experiences with that professional. Clearly LinkedIn, but yeah, I would imagine that there are so many associations as well, and there definitely are with property managers, for example, NARPM. I think the message here is network, mm-hmm. and never stop to identify really who can help you in your business the most. Okay, well, those were pretty much all the questions that I had for you. So thanks so much for joining us here today. And for those of you who are watching and want to learn more, we talked about a couple of blog posts here that are actually live right now on the Buildium blog. So feel free to check those out. And thanks again for watching. We'll see you again soon. Thanks, Brandon.
Thank you.